Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Well, we survived. Not only did we survive, we thrived today. Interest rates going up by 0.75%, or in other words, 75 basis point, the highest hike we've seen in interest rates since 1994 to combat this crazy era that we're living in with inflation. And on top of that, Tesla as well soars. Before we get into it, do me a favor, hit the like button, hit the subscribe button, ring that bell, and this is going to be an interesting one. Let's get into it. So for about the last 10 days, really ever since before the CPI information came out, the CPI data that told us that inflation was actually running hotter than we expected, and then after it came out and it was hotter than expected, all this fear, uncertainty, and doubt regarding the Fed, and then this week to find out that the Fed essentially leaked out that they're going to raise by 75 basis point, a rate hike that hasn't been seen since 1994. We all thought everything was going to go bad. Everyone was unsure about what was going to happen. The markets went in turmoil on Monday, and on Tuesday, it kind of leveled out and almost rebounded a little bit. And then today, Wednesday, D-Day, 2 p.m., we find out, yes, indeed, the Fed's raising by 75 basis point. Once again, the highest increase since 1994. And what happens? The market continues to rally. Jerome Powell comes out and speaks at 2:30, and guess what? He didn't send the market tumbling like we saw in the previous months, in all of 2022, really. Instead, everything rebounded. Everything continues stronger. It was as if the market has done a 180. Instead of being fearful about higher rates, the market celebrated higher rates. How can this be? Why is this? How does any of this make sense? Well, I'll give you my opinion. What I think is happening is that the market is essentially saying we are sick and freaking tired of all this crap, all this up and down, all this pain that we're dragging out since November. 8 months of this. Instead, the market is celebrating a higher interest rate, a more aggressive Fed, because the market is saying, give us our damn medicine and let us get beyond this. We are tired of this. They're celebrating the interest rate hike because it means the Fed's taking this more serious. It means that they're being more hawkish. They're not trying to give us this slow dose. They're saying, no, we're going to hit it with everything we got. We're going to go ahead, take this medicine, and let's see if this can cure inflation. And the market is celebrating that because the market knows the sooner we get past this, the sooner we take this hit, this medicine, then the sooner we can get to good times again. The sooner we can see inflation taper and come back down, the sooner that we can get back to normal. And so the market celebrated this today, which is a little bit ironic, all right? Especially because this was kind of a last-minute decision by the Fed, right? Again, the Fed tends to try and telegraph things for us so that we're not caught off guard. However, we were kind of caught off guard this week when essentially it was leaked that the Fed is going to do a 75 basis point. Don't forget, just a month ago, Jerome Powell said this was essentially off the table. And now here we are doing 75 basis point, finding out days before the actual decision happens. So what does this mean going forward? Well, in the actual release, if you went through it in the dot plots, what we learned is that the Fed is actually targeting a 3.4% rate by the end of this year. This is a upwards revision from by about 1.5% from March. And so how do we get there? Well, you can do the math, right? Right now, we're sitting at a 75 basis point plus a 50 basis point we did last month, and then a quarter before that, right? So you add that up, we're about 1.5% at the moment. And so to get to 3.4, right, you can do it through another 75, a couple 50s, right? And we can get there. Or you can do it through a series of 50s. You can throw a 25 in, or you can figure it out. I mean, this isn't, crazy math. But the point is there's many ways you can get there. And again, the market celebrated this as well. All right, I was a little hesitant to get too excited once that 75 basis point came out and the market celebrated. I was going through the dot plot and everything just to understand what was actually happening and to see how long it would take the market to digest everything. And if you notice, the market actually did start to go down. The Dow Jones, I think the S&P 500 even dipped into the red before they continued their rally. Right? So I thought this was very bullish. And this is beyond bullish for Tesla. Let's take a look at Tesla. So here we can see that Tesla had a very solid day. All right, Tesla was up about 6%. We closed at $699 a share. And on top of that, we're running in the after hours over $700. So that's great. So what does this mean for Tesla? All right, there's a lot of things happening right now with Tesla, a lot of news out there. And honestly, a lot of it seems to be noise. Some of it's good news. But I think the thing we need to focus right now when it comes to Tesla are any potential headwinds. Right? We talked about it a couple days ago about what's left remaining for the headwinds for Tesla. And the biggest one that I still see as far as headwinds is just Q2 and this Bitcoin impairment that we're coming up on. So if you guys don't know, the Bitcoin impairment, how does that work? Well, technically, Tesla holds Bitcoin on the balance sheet. And so if Bitcoin falls below what Tesla as a company initially purchased it, Tesla has to mark it as a loss, and it's just a paper loss against what they actually are against their actual numbers for the quarter. So normally you'll see analysts in Wall Street, everybody will back this out because they understand this is a nothing burger, this is just artificial. And really the only reason it works this way is because, well, our ways, our financial rules are just kind of archaic and haven't caught up yet to the world of crypto and what is Bitcoin and how should it be carried on a balance sheet. And so the archaic way to do this is just to write it as an impairment loss. And so at the moment, right, it looks like we're about 3, maybe even 500 million hit that Tesla will take for the quarter. But again, most people ignore this. The same way people kind of back out whenever Tesla gets their credit sales for other OEMs not being able to sell enough electric vehicles, right? They back that out as well to see what Tesla actually made and what they actually earned. So I think, honestly, both of those will be a wash. Okay, so if those two are a wash, then what's the other headwind? Well, the headwind isn't so much about whether or not people will wash out the Bitcoin impairment. It's more about the FUD and the noise that will come out. I've already seen several articles talking about how Tesla has a Bitcoin problem. Tesla doesn't have a Bitcoin problem. Tesla really doesn't have any problems. The only problem Tesla has is the media and the FUD and the narrative out there. In fact, Tesla only has one real headwind besides the Bitcoin issue. And it's just the fact that Q2 isn't going to be a great quarter for Tesla. All right. At least not at the moment, doesn't appear it will be. And it's all due to the zero COVID rules in China that had the factory locked down, and Tesla had to ramp up in the quarter. And so really, this is yet another thing I think that analysts are starting to bake in. Now, I don't know how all the analysts work or how things work within their shops, but Gary Black has given some insight. And according to Gary Black, he believes, or he says, that normally up until the last 2 weeks of the quarter, you don't see these analysts change their revisions and bring them down. So right now, the big problem that I see is that they still have delivery estimates way too high. I think right now the average is maybe anywhere between 275,000 to 295,000 for the quarter. And in reality, they need to come back down to earth to about 240,000 to 250,000. Now, I can kind of understand if they want to keep their numbers there just because it is Tesla, and Tesla does tend to surprise, if you will, right? Tesla tends to have, every quarter, it's almost as if Tesla has a Steve Jobs moments of one more thing. Oh yeah, forgot about this, mic drop. So hopefully that does happen again. Hopefully Tesla surprises with the number like 260, 270,000 vehicles. I'm not expecting that at all. I don't think you should expect that. This is a very challenging quarter. The direct words from the horse's mouth, aka Elon Musk, really hard quarter, very tough quarter. So if we can get past this Q2, if we can get past all this Fed noise and all that, if we can get past Russia and Ukraine, it looks like Xi Jinping from China, the president of China, it looks like he's putting pressure now on Putin as well to bring this entire conflict to a rest, to a settlement, right? If we can get past all of these things, like I've been saying for a little bit here now, I think the back half of this year can be a very good one for us. Now, it's all really going to depend on the next, call it month, right? Really, July, I think, is going to be the month. July, August, call it. Because in July and August, we should know more about inflation. We'll know more about the Fed rate hikes. We'll know more about Russia and Ukraine. We'll have gone through and we'll have heard what Tesla's numbers were for Q2. But not just that, but we'll also have already gone through the earnings and the results of that. And so from there, oh my goodness, watch out. You're going to have a Tesla that has no shutdowns in China, knock on wood. We're going to have a Tesla that is just getting done with their AI day, with their investor meeting, with their stock split. We're going to have a Tesla that is going to be continuing to ramp up Berlin more aggressively, right? We're at about 1,000 vehicles a week, right? Shout out to Giga Berlin team. You guys are doing awesome. We have Giga Austin, which just got done producing 4680 batteries at a run rate of 1 million per month. Don't forget, it wasn't too long ago where the Cato factory was celebrating their 1 millionth battery that they had ever made for the 4680. And now it appears at a million battery run rate per month. And although that's not what we need, it is progress and it is growing faster and faster, right? It's kind of that exponential curve. So there's a lot of good things happening here. And of course, as the quarters go, Tesla's going to grow faster, right? We're going to see the biggest thing for this next half will be FSD Beta. All right, the progress we're seeing on FSD Beta is immense. All right, we are right now in June. 10.12.2 was released, and it's getting released essentially to everybody, right? It's growing faster and faster and faster, and we're seeing the numbers grow. I think at this point we're at 200,000, maybe even more than 200,000 FSD Beta users. Think about that. What other company has this potential autonomous, it's not done, it's not full self-driving yet, but this potential of this autonomous software out there to over 200,000 users? It's only Tesla in 2 different countries, in every city, right? I mean, this is immense. And if you're watching the progress, it is getting ridiculous. So many people are having zero disengagement drives now, and it's just getting better and better. And according to Elon, 10.13, sorry, these numbers get kind of confusing. 10.13 is supposed to be very impressive. And we're not even yet at version 11, which will be the full stack. So lots of things to be excited about. I think the more progress we see, especially since we're only in June, I think it's becoming very clear and very obvious why Elon, Drew, Zach, everybody's been so bullish about getting there at the end of this year for full self-driving, better than human. In other words, level 4. And not just that, but now apparently Elon insinuated that this summer they may be ready to open up FSD Beta in Australia. So country number 3, continent number 2, right? That's pretty exciting. And then, of course, he also alluded to the fact that they're almost ready to have something to show to EU regulators, which, again, would be continent number 4, right? I mean, you see how this is happening, all right? While Waymo and Cruise are trying to go from a 3-mile, 5-mile, whatever it is in Chandler, Arizona, to 25% of San Francisco, Tesla's like, no, we're going to go from country to country, continent to continent, right? We're expanding exponentially. So I'm very excited about this. I think that, I hate to say it, and I'm not going to say it. All I'm going to say is that I think that we can breathe easy, at least for a little bit now. Now, I will warn you. We've seen these days after the Fed speaks, or after Jerome Powell speaks, after the Fed releases what they're doing, and we get these positive reactions like we did today. But then the next day can be a little, we digested a little more, or, we rallied. Let's go ahead and take some gains before this rally's over in case it's just a dead cat bounce. So be cautious. I wouldn't be too excited just yet. Let's get through the rest of this week. Let's finish digesting everything. And then, just maybe, it'll be clear sailing onward and upwards. All right, we're going to leave it there. If you enjoy this type of video, if this helped you or provided value in any way, do me a favor. Hit the like button, hit the subscribe button, ring that bell. I love you all. Thank you if you stuck to the end. Peace.